All right, I got the recording up, and looks like I got audio. This is Jeff Scott, and welcome to this week's Top Down Review. I'm doing this on Monday the 17th, thanks to the birthday of a couple of our early presidents. We have an extra day of vacation, or day off, and I'll spend today at the New York Traders Expo. I have some comments about that. As you can see, it's about 7 o'clock, a little bit after 7 o'clock. And as I always like to do, I like to take a quick look-see and see if the futures are showing anything at this point. And they're up a teeny bit. I know that Asia had a decent day yesterday on the back of the U.S. data, and we'll see if that can play forward. As you can see, the title for today's show is a question mark. Is all that glitters? I can't spell. So since my mom would be mad at me, I'll fix it. It's all that glitters, more than just gold and silver. This is really postscript from the HGSI New York City Summit. And my contact information is jeffrey@highgrowthstock.com. The disclaimer, same as always, this is for educational purposes only. Any recommendations in the spirit of education on investment advice. I am a doctor, not a broker. I teamed up with George Lee this weekend, who's a tennis pro, and together we had just a great meeting. Although we made it very clear, everything we do and continue to do is in the sake of education and making you better traders and not telling you what to trade. Certainly, we're not going to tell you when to sell it either. And both George and I are fully independent, and I'm not affiliated with any software vendor or trading company. Tools that we demonstrate, that I demonstrate on these calls, are things that I've purchased myself and I use in my daily trading. In fact, what I do right now is what I do every night. And the reason why I don't charge you is I'm doing this for me. I'm just letting you watch. So I'm all about gurus, but I'm all about becoming my own guru. And by that I mean you need to figure out who it is that you're going to rely upon. For me, it's Woodward and Brown. It's Alexander Elder, who I got to listen to today. It's Mark Minervini. It's William O'Neill, Morales and Hatcher, Dan Tharp, and others. Bigelow is my candlestick guru. There's a couple of websites I like. I know George Lee has got a heaping dose of Jesse Stein and David Elliott and some of his gurus. But at the end of the day, as I said at the meeting, no one is going to give you a piece of software and tell you that you don't need to study, you don't need to learn, you just put it on, you turn it on, and it makes you money. And if you are not making money with HGSI or VectorVest or TCNet or TradeStation or TD Ameritrade, it may not be the fault of the software you're using, but rather how you trade, your position size, and your money management, your choice of stocks, your interpretation of the market. So when I say be your own guru, take responsibility and take responsibility to learn yourself so that you rely upon the person who cares most about your money. Except maybe in some cases where, like in my case, my wife probably cares more about what I do, and then my children. If I was to have to get rid of all the junk on my computer, then I would have to limit myself to a few programs, and that's what I use on these calls and preparing for the calls. I need a real-time trading platform, whether it's TradeStation or Thinkorswim. HGSI is my post-market analysis iterator I use for both looking at stock setups and triggers, but also to understand the market. I do use seasonals, although I'm going to make this a shorter than normal one, not go into today, as well as MarketSmith. But what I really need is what I've learned from my gurus, which I got mostly from reading. High Growth Stock Investor, here's the website. Freely reports from Ron Brown. I know that Gil's actually giving a talk for them tomorrow, Gil Morales. It's a bargain from the software perspective and the power, and I'm going to demonstrate some things tonight, which should be coming out on an update sometime this week. For those who are new, I post these every week on the HGSI site. I also have a YouTube site where I'm going back now a couple of years. There's a 3-part one that people continue to comment on, which was a real basics. Gosh, it's been a while since I did it, but it basically says part 1, part 2, and part 3. And most people like part one, where I really went through slowly how I use these indicators and how I make treatment decisions. Don't want to forget that the next meeting, one of the next things on my schedule is a PV meeting. And I know a lot of folks that came to Manhattan told me they're going to come to PV as well. I gave them a taste of what I've learned from being around, and why not go to where the masters are going to give you the whole thing. So hopefully some of you will find that compelling as well, and go to the HGSI website where you can read about the meeting. For those who've been there before, I've had some discussions with Ron. Different approach. Monday we'll be in the market trading live. Maybe we'll have a couple of projectors going. Maybe I'll bring one of mine. So maybe I could be trading, George Lee can be trading, Ron Brown could be trading, Ian can be telling us if we're making good moves or bad moves. But maybe that, but clearly there will be a lot of trading on Monday. And that approach, I think you all know how I approach trading. I look for pullbacks and uptrends and stocks that I like stocks that make money, which is not necessarily a good thing. Really had a great time in New York at the summit. And I guess part of why I was happy is what a week the market was last week. Hopefully you all were participants. I always like to look at the review of the market. When I look at the, quote, review of the market, I'm especially looking at how everything performed last weekend. As I talked with the people at the meeting, there are 30 or 40 watch groups, I guess by 40, 50, that I put together over the week. They come from HGSI, from investors.com, from MarketSmith. They come from places like Bespoke. Any place that I go to that puts out a list of interesting stocks, I probably keep track of it. And then I run a number of scans using my indicators in TradeStation as well as within HGSI. What I do is I put those into a directory, and from that directory in HGSI, that's where I do most of my prospecting. Now that directory includes a lot of different groups of stocks, and I update these on a regular basis. And some of these I will even, I forgot to put those in there, but some of these I will actually update during the week. Now a lot of people have asked me is how easy is it to move information. So since I haven't done these yet, I have done them because I haven't run them yet. Let me just run it, see what I got real quickly. Perfect person pivot scanner, level breakouts from the squeeze, PSAR moving up. This is from the weekend. All I got to do is highlight, copy, go back to HGSI, highlight where I want to put it, open up the edit, and then I always touch it for good luck, but I hit paste, and I just made it in there. And let me just fix the other one that I forgot to do, which was the breakdowns for the squeeze. Do that. It is this easy, though, as I just showed you. Identify a list of stocks. Highlight them. Whether this is in a Word document, somebody else's list, all I do is copy them directly into HGSI, hit that little button, paste them. I have no idea why I touch it first, but I've always done it, so whether it means anything or not. There you go. So I'll come back to TradeStation in a minute. So let's look for the groups that lost last week. They would be in red. They would be missing. Every group that I track, I kind of have my numbers wrong. 112 minus 17, so there's about 90 different groups that I track during the week. I didn't realize there were that many. Some of them come pre-built within HGSI. Of the 90 different groups I track, 100% of those groups were positive. If you lost money last week, then you have some challenges with your choice of selections, your choice of market direction, or your position size. If you just bought the spiders from Friday to Friday were up 2.32%. If you bought what was only about 65 stocks in the HGS 100 and just bought an equal dollar weighted, they were up 3%. Now, I own a bunch of stocks, and I never like to talk about why, but it's got a lot to do with the size of my portfolio. the fact that I believe that I'm able to manage them, and my performance last year and years before, I think I'll put up with anybody. Those stocks were up 3.35% for the week. Now that would imply I held them all, which I didn't. I typically rotate a third out with new stocks, and if you look at my buy watch, the ones that I went through last week were up 5.56%. I'm pretty proud that I picked 61 stocks from looking at their charts, and 55 went up. Part of it is I'm good, maybe, I don't know, I can't say that. I'm not that arrogant. But it's because the market was up that much. I beat the market, which is what I want to do. Now, freebies. In the smart groups that are every day, I update automatically in HGSI with no input except you hitting the update button of these things called smart groups. Go to Woodward and Brown. There's one called Best of Woodward and Brown. There's one called Best Stocks Under 15. All I did is buy those stocks on Friday last week and hold them for the week. 86% up, 5.17 under 15. 9 out of 10 up, 4.6 up on Best of Woodward and Brown. How do I conclude these super performances for the week? I conclude them as saying growth stocks were in vogue and small stocks were in vogue last week. Now, the most amazing thing is this one up here would have been in a bad market, would have been leading to the downside. And these are stocks that had mobile breakdowns on Friday a week ago, and they were all up for the week. So breakdowns failed for the week, which is interesting. But not surprisingly, why did breakdowns fail? Because the market was up so much. And you can see this is from Friday to Friday, equal dollar value of $5,000. And the only filter I put on them is no stocks less than $2.50 or 150,000 shares. One would say, well, Jeff, that's not fair. You need to do from Monday at the open because I can't buy them at Friday's close. Okay, I'll show you that one. And not as hot, but 5% on the ones that I was going to buy or did buy. 4.05 from Monday's open on Best of Woodward and Brown. 5.06 on the Best of under $15. And if we go down, we see my overall holdings still above 3%. HGS 100 above 2.6. And the S&P had a great week from open to close as well, up 2.3. And again, no down groups. Some of the super studs for the week, Lanet, one of the ones that I profiled last week. Ligand we profiled. China Distance Learning was up 16.7%. Regeneron had a big week. Skeechers was up 21%. And then a bunch of gold and silver. And if you remember, if you go back and look last week, I was very interested in miners, especially silver miners. We'll see how that went. Something that I learned from George this week. This was actually so much fun in New York. We had a lot of kudos. Actually, the first time I've ever been to a live meeting and two participants almost started killing each other. And it was my fault, but, you know, bygones. One of the things that George pointed out was that he'll look at the stocks with the biggest volume both after the day and during the day, and he builds a watch list off of them. And when you look at performance of these stocks, some of them were just phenomenal for the week and for the day. You really can build in the market nothing too sexy, just a watch list of some very high stocks that had a big growth over their regular volume. This is relative volume, which tells me how much their volume was compared to their normal volume. So this is done in FinViz. George spent a lot of time on FinViz. The Hindenburg Omen, no surprise, a great week. Nothing. New highs trailing up. New lows are disappearing. Bucketology, because we came from so oversold, we're not totally overbought yet. Only 8% above the S&P 1500 top Bollinger Band. We're not 60% above the midline, so we're clearly bullish there. We are definitely shifting to the right, which is the more oversold area, but probably can get a lot more oversold before we have to rebound. We'll talk about whether I think we have a rebound or not coming, but or a fall or not coming. But clearly, we've moved this far to the right quite a bit. I like to look at the ebb and flow of the markets using EdgeRater, one of my favorite tools, a tool that we highlighted at the meeting. So basically, this is a list of 10 major indexes, or 1, 2, 3, 4, 5, 6, 7, 8, 10 indexes, and then a composite of all of them. And what this is doing is it's looking, first group is, did anybody have and have kahunas, looking at 0.24 in the light color, 0.4 in the dark color of a kahuna of movement within the Bollinger Band, darker red being a big move to the downside, darker blue, big move to the upside. Then we look at the percent V for the major indexes. When you're above 0.7, you'll paint green. When you're below 0.4, you'll paint red. If you're 0.4 to 0.7, you will be yellow. Markets move up more when this is green because the indexes are near the top. When the indexes start to get extended, like we saw a few weeks back, when many of them started going over the top of the Bollinger Band, it was time for us to get concerned about a correction or at least a pullback, and we've seen this happen a couple of times. Everything is well below 1.0, so we're not at the highest highs that we're going to get to. The last thing I look at is this, which is based upon Ian's percent B times bandwidth signal. Green is time for the bulls to go playing in the market. Red is for the bears, and you can see we're firmly entrenched in bullish territory. How do you change that? Well, a couple of kahunas to the downside, like you saw here. Kahunas here, the downside, can make a change pretty quickly. And that's why I watch this, looking at the kahunas and seeing what my colors are. Not going to talk too much about George Lee setups right now, but to remind everybody within EdgeRater, you can scan stocks that are in a squeeze and then look for those with PSAR flips, Lobo breakouts, pocket pivots, counter channel breakouts. And one of the things that I took home from George Lee is that perhaps what I should be looking at on the PSAR is not necessarily stocks that have already flipped, but looking at stocks who are close to flipping and whose positions are right under, are right above the price and getting ready to flip. So that's something that we'll talk about perhaps sometime. This isn't showing that you have to go into a different view. The other thing that I just wanted to point out is the beauty of Chris White's EdgeRater charts. And I use things the way I use things, and I miss a lot of things, and I don't think I realized how great these charts were, and that you just have to go under layouts, and I'm in a picture here, so I'm not going to do it live, but in that layout screen, you hit the layout screen, and all you got to do is put the George Lee layout, and you can see the PSARs. You could see the Keltner channel, which would be the blue lines, the Bollinger Bands, and the red lines. You could see when you get the Bollingers inside the Keltner, you start to get pink. And then you could also look for periods of squeeze, which is the pink, which you'll see here, and squeeze in multiple time frames, daily, weekly, and monthly, which is really cool. So this is something you might want to look at if you have EdgeRater. If you don't have EdgeRater, pretend you were at the New York City Traders Expo and call up Chris and ask for the Traders Expo deal. You had a pretty nice offer on the table. So what a week. You get a couple of weeks where you're down a little bit, and you start to wonder if this is the major correction. This was certainly deeper as we look at. And then you get a week like that. It's felt pretty good to be long this week. Let's take a look, real quick look at some of the elder stuff. At the meeting, just for the sake of completeness, let's see if it's in here. I think I brought it over, did I? I put together an indicator package which I provided to people at the meeting, and the indicator package had a number of my scans built in, as well as the charting indicators and radar screen. That's not what I want to open up. And so hopefully they're going to get some value out of it. But I do a lot of scans during the day, during the night, and I try and get an understanding of what the market is doing. So typically on this call, what I'm really doing is just looking at the status of the Scott, that's what status of the market by looking at the elder indicators. And something didn't like what I did. But basically, what I provided to attendees at my meeting this weekend was radar screens that included green candle lows, red candle highs, isolated failure, squeeze, mobile breakouts from the squeeze, pocket pivots, and Bible gap ups, as well as what I call my combined dots that duplicate all these down here so you get an idea of when the market's weak or strong, and also my high jump indicator. So I'll probably be offering this for sale again. If you have interest, please let me know. I don't typically sell things on this call. I don't want to make it a big part of it. So in the elder indicators, and I actually listened to Alexander Elder today, we went from a great buying opportunity, it turns out, as we were deep below the lower envelope in blue, and we shot all the way up to the top in green on the S&P 500. You know, Elder talked today about how he doesn't like to buy when you're at the top of the envelope. I don't know about how I feel about that, because you could see in major uptrends, it just tracks around the top. It continues to go up. But absolutely, you get higher risk as you get more extended, green on the weekly, blue on the monthly. You know what? We haven't quite made a new high here, but we're getting close. And we've already got a new high on the MACD histogram. We'll see if the line gets up there. There's a lot of buying pressure on this move. So despite the fact that we had a tough week or two, we are getting back out to new highs on the S&P. The NASDAQ, very quickly, broken record, same story. It has hit a new high. Its MACD histogram has made a new point. We see the line gets up there. You can see from a high jump perspective, I'm looking back 200 days. It's 86% of the highest high jump in the last 200 trading days. So that's getting up to a high number. If you look at the Dow Jones Industrials, you see green here, green and blue. The Dow clearly was the laggard, and the Dow caught up this week, especially on Friday. So everything looks very strong. And anything else here I want to look at before I move on? During the day, and I don't have a clean, I haven't loaded this up yet, but during the day, I'm basically looking to see if there's a lot of green candle lows. Why? Because if there's a lot of green candle lows, those are evidence of reversals and things that would bother me. I look for red candle highs because these are also reversals to the downside. May not pan out to be much, but they would be concerning. Ice-hold failures are stocks that don't get through the 50-day moving average. They have a tendency, if they fail to 50, to take out their prior low. Squeezes, we'll talk a lot about those. We'll talk more about them today. I scan for those. And then I combine my mobile breakdown and my mobile breakouts with the squeezes, and I look for them. So I usually am scanning a huge watch list here. We got the sectors and the 3 X's in the markets. I look for Bible gap ups, as I showed people at the meeting. And I really get a great sense of is not only if there's been a Bible gap up, and you can see there was almost a Bible gap up on gold miners on Friday, I get an idea of what the percentage of the necessary volume is, what the percentage of the gap is, and I can see this across the board on my stocks. So it's a great way for me to search the market. Another thing that we had this weekend, and just kudos to my extra speakers, Chris White from EdgeRater did a great job talking about MACD divergence. And I've got a lot of indicators I don't talk about here because I don't want to get stuck and not go into my market review. But Jan Arps from www.janarps.com, both Jan and his son Craig, or known as Hawk Arps, gave a wonderful presentation about how they use their indicators. And I actually learned a lot because I have a lot of their indicators, and I picked up some pointers. And they're in my radar screen as well. So enough of that. And let's shut that down and let's go into HGSI. So I'm all about process. I think people might think I'm scattered and have too many programs, but I have a process that works for me. The first thing that I do is I go into my designer. I go into my user groups. I go down to the Woodward and Brown user group. And I go into Major Markets Plus. Now, I'm going to go ahead and I'm going to do it in the warehouse view. invited myself to a webinar. That was nice of you. Oh, I know what that is about. I should mention that in a second. So I'll go here down to the Woodward & Brown user groups. I will open up Major Markets Plus. So if you're a newbie, you might be scared by all those different directories that I have. You might open up the program and see all the views and be nervous. I don't use a lot of them. I'm sort of boring. I start with the T1 top-down analysis force and Bongo scorecard. What this view is all about, price and volume and force. It's heavily weighted to today and this week, but because it has a force 13 in the ranking module, it actually includes 2 or 3 weeks worth of data. I rank by high raw combo rank. And my combo here, as I said, is looking at things such as price change 1 day, the force 2 and 13, accumulation distribution, and the 5-day pricing. And it's most heavily weighted, as you can see here, on 1-day price movement. So we can see the leaders are silver, which was my pick last week, and gold. We can see volatility in the dollar are down below. And stocks are sitting here fine. This was a week where you can see silver was up 7, semis were up 4.4. Russell was up almost 3%. We know the S&P was up a little bit over 2 at 2.3. And the only things that were down, frankly, were 0.2 down on the bonds. The dollar was down a little bit, and volatility got crushed. So there's a reason why I'm kind of bullish sounding. And now we'll start looking at charts and get an idea of how much longer that's going to last. Take a look at the S&P 500. I'm not going to need to go into all the indexes because they all look very, very, very similar. I am not one person that believes that we have to have a big correction tomorrow. I am concerned, like everybody else, that we continue to avoid having much of a pullback. And we just got through one. The last big pullback we had was a pullback that started in September of 2012 and ran from here down to here. So it was basically about 8.5% down over 43 trading days. So it's about 2 months of trading. You'll notice things on mine like this Create Indicator Report, which I don't think are out yet. I'm going to talk about the things that I find really useful in these. And I got some real cool things to show you if you weren't on last week. So you look at it, you had one big pullback, and then the market, since the green candle low that occurred in December to the close was, I don't know if it flashes on your view, but it flashes on me when I make it full screen. So let me just make it a little smaller than full screen. Never understood why. But you can see you have about 37% over a period of time of a year in about 3 months. So big move in the market. We just had our big pullback, per se, and I guess this was the high. And to the low-ish, you would pull back about 6%. Everything looks like this. I don't need to go into the other markets. The laggard was the Dow, but it too broke above the S&P, broke above the 50-day moving average. So let me just give you a quick review of what I show you here. On the bottom are volume and kahunas. There's no volume on the S&P 500, so I don't show you volume. Kahunas in blue are good and red are bad. The next bar up are what we call phoenixes and eurekas. These are measured on the NYSE. Green is our follow-through day. Red is a follow-through day to the negative. For moving averages, red is a 200 simple, blue is a 50 simple, and green is a 17-day simple. Magenta is an 8-day exponential, something I picked up from Steve Bigelow, who got it from Ricky. I think Ricky Wayne, I'm not sure what his last name is. And Ricky was a user, now it's his own website and chat room, but he really found that when you break above that 8-day exponential, that might be the early time to get into a buy, and that stocks have a tendency to stay above the 8-day in an uptrend and below that 8-day in a downtrend, and it works. This is the Bollinger Band. You all know I have Bongo Weekly and Bongo Daily. Accumulation distribution, you don't see anything in the force long or short because there's no volume here. I'm going to probably get rid of my, actually I already did, so I don't have to say anything. This is the high jump bar, and when it gets to the top, you tend to see things to go sideways. And you'll notice a lot of times when it's toppy, you'll see red candle highs, which might be somewhat of a confirmation, perhaps, that you're going to see a bit of a pullback. Green candle lows are there. Viable gap ups, which will be here since they require volume. You'll never see on the S&P 500. And now in mustard or yellow, you see the squeeze. And down here, greens and reds are mobile breakouts. This is something that's coming, and I will be working this week when I got a consulting job on Tuesday. And then Wednesday, Thursday, and Friday, I'm going to be preparing views and filters to give to George so that you can do the things that I'm doing if you want to. Again, I'm not going to go to all the major indices because they all look like this. I will look at volatility. And, George Lee and I get along great. My trading has really wonderfully improved since I know him. The only problem with George is he calls me at the end of the day, tell me what he made a ton of money, and I keep wanting him to call me at the beginning of the day. Maybe that'll get better. I always learned that he did well when the VIX was low. He likes to talk about how he makes money on VIX spikes, and I think we're both right. I think the hardest time to make money is when the VIX is rising. So if the VIX is staying low, the markets are your friend. If the VIX is rising to the peak, this is when you'll get calamity, and a falling VIX is time to go big in the market. You could see last week we had a falling VIX. And now we're not down to the lowest of the lows, but we've repeated a pattern. What is that pattern? Let's clean off my lines here. That pattern is what am I doing wrong here? The pattern is that we get these big spikes, we go right back down. And we just had another big spike. And if you look at them, middle of June to September, so about 4 months. January to June, 5 months. October to February, 4 months. Does that mean we got a couple more months before the next? I don't know. But I do know that every time the volatility goes up, it gets clobbered. If this was a stock, you're shorting it, you're not buying it right now. All I can say is, let's hope it falls if you're bullish. But if it gets back above this 200-day moving average and starts going north, it will be a sign that the party time has diminished. Dollar. Dollar's bearish right now. You could see a double top here, and now it's stuck below its moving averages, and it's struggling to stay above the 50. It's well below the 200, and right now, weak dollar seems to persist. Oil had a run-up last week, got above its 200 and retested. Let's see if it can hold. It did not hold when it did this a month ago. If you're bullish on oil and exploration companies, you'd like to see it hold at that 200 and go higher. Last week I was bullish on gold and silver. They both had a great week. You can see the pocket pivots in the GLD. Now you'll notice it had some squeezes earlier in the week and a mobile breakout. Gold on Friday did not have a great day, actually. Gold, open it up here, did get above the 200, but it ended up with a doji. And it'll be interesting to see. If I'm a betting person, the gold pulls back to the 200, bounces and goes off, and I'm still bullish on gold. If we had a double bottom back here, and let's see if gold's going to give us a significant run. But it did stall here. If I look at gold miners, GDX, right? Yep, had similar doji, and it's a little bit higher off the 200. It's moved better than just gold. Silver, can't remember what the area is. And you can see closing strong on the day, huge move. Everything's green. Kahuna, tons of volume in silver. And last week we went 1, 2, 3, 4, 5. Why was I more bullish? Well, because the same thing happened. It got above the 50. It tested the 50 and held, and it opened up gap 1, 2, 3, 4, 5. A nice move for the week on silver. Since I don't have volume on the S&P 500. Sometimes I would go down one group into the broad market indexes, and I will bring up the S&P 1500, which is a nice index because it has small, medium, and large in it. And it does have volume. And then I go into what's called the iShares. And these are Ian stuff, and you know, I don't make it, and even when I'm at the podium, I feel like, you know, Ian hasn't written a book, and it's the world's loss, and I'm going to do my best whenever I'm in front of people to talk about the great work that Ian Woodward has done and how I use them. This is Ian's work. I just get to tell the story. You could see that's kind of direction movement. New highs, new lows, all clear here, lots of green. You can see the cumulative new high line continues to point up. That's nice to see. If we look at accumulation distribution, saw exactly what we wanted last week. We saw the A's get above the E's, A's and B's heading up, the B's and E's heading down. Greens are A's and B's, darker is an A, reds and the pink are the E's and B's, as we retook that 22-day exponential moving average. We look at 5-to-1 days. We had one earlier in the week. And since we only had that, I don't think we had any 10-to-1s. And now the other thing that's important to me is that we recaptured the moving average for the number of stocks trading above the 20-day moving average. The 30 were just below on the 50 and the 200. And I did talk about in the last week or so, maybe 2 weeks ago, 1, 2, 3, 4, 5, 6, that we were getting to a point where the market usually rebounds. So we're not at a point where we've extended above the number of shares to another moving average that we expect an obvious pullback. So I look at all this, and I will put my rotary to moderate bullish, still concerned, and my concern is mostly like everybody else, knowing that we've gone a long ways, and how much longer can we necessarily go before we get somewhat of a pullback. Then again, no rule says you have to have a pullback, but you will. Go down to industry groups. So remember, I've been in the T1, which is all technical, price, and volume related. Now I'm going to go to the industry groups. Now the problem with the T1 is it's really given me an analysis going back 4 or 5 weeks, 2 or 3 weeks rather. I want to know what's moving now, today, not 2 or 3 weeks ago. So I'm going to change this to the 2-day force. And the first thing you're going to notice is that from 145 it comes about 85. Now, a week ago, this number was much lower, maybe 10. And 2 weeks ago, I think it was 10. And these are the number of groups where price change times volume is a positive number. So to get on this list, at the top, you either have to have huge volume, but you have, with the price change, it's positive. And most of these are driven by volume, unfortunately, not necessarily price change. And one of the things that I want George to do for me is to help me create a different, Jeffrey force that will look at a factor of how much today's volume is compared to regular volume and use that instead of absolute volume. So let's just take a look at what we see. We see semis up at the top. Now, if you want to see a good market, you'd expect technology and financials to lead. And on the force down, you can see the 10 wins to the downside include Biotech, which had a bad day on Friday, but a huge week of over 10%. And you see my financials. You see investment bankers, diversified, and asset bankers in here. So finance is clearly weak. Internet retail is my gold. Silver is going to be somewhere close. We saw some interesting looking gem stock, diversified metal and mining. So a lot of strength in the miners. Oil and gas starting to make their way up the list. So let's quickly go through the top 10, which is part of what I like to do. So NVIDIA, I think they had a nice earnings beat. Got the trifecta, earnings, revenue, and raised guidance. Now, on stocks, I want my earnings per share here. I haven't done a big review yet today, so I'm going to look purely at technical. This is where I want to buy, right? It's too late. But what did I have right here? And you wonder, I'm a big fan of mobile breakouts, squeezes, kahunas. because I want to buy something that it's in an uptrend, right? Slight uptrend, pulls back to a major moving average. Bad, 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 up. Retook the 50. And this was a day to be interested because you had volume, a kahuna taking out the 8-day and the 50-day, a mobile breakout, and a viable gap up. So this should have gotten my attention. And then you watch it pull back down, and then let's see, it's running to current, kind of just chop. And then this week, what got exciting was, now you've got these little saucers here. It's basing here. Frankly, it's in a relatively tight base, around ranging between 15.25 and 16.4. So this is 3 months within $1. It looks like a lot here, but look at the range here. And what you had was a kahuna getting above the 50 with a mobile breakout and a squeeze. All my indicators turned green. So yes, the big move occurred on Wednesday with earnings, but I'd argue the time to get in would be in a stock that had been basing for quite some time with a kahuna, mobile breakout, and a squeeze about 5 days ago. Now, I didn't pick that up, but I certainly did back here on earnings day with the big volume as well. So NVIDIA looks good. I'd have to look at it on a longer term and decide whether or not it's something below 8 o'clock that is still worth chasing. And you can see that it's been basing now for months. This is on a weekly chart. So NVIDIA, I don't think it's too far gone necessarily, but it's gone. Here's another one that had great earnings, NXPI. This is the one that's made my list several times over the last 6 or 7 months. Zoom out a little bit. It's getting extended. You can see it's right at the top of the high jump bar. Micron Technology. This keeps going and going and going. Not at the top of the high jump bar. Great earnings per share growth, albeit slowing down in the out quarters. Look at the revenue growth. 1.8, 2, 2, 3, 2, 8, 4. What a beautiful story there. Pretty much all green except for distribution, which is neutral. So Freescale is one that I was looking at last week. Had a nice breakout on Tuesday or Wednesday. Big run there. Certainly getting extended. You see it's at the top. But clearly this is a industry in semis that is outperforming, and one might want to go and take a look. If you get a nice cup, probably too long to say it's a handle, but definitely a base, cup in that base, and a breakout with a pocket pivot on the weekly chart. So probably too far gone, but that's what you want to be looking for and trying to find them before they go too far. All right, here's Taiwan Semiconductor. I don't like the earnings per share growth. Breaking above the 200 here. It's been in the downtrend. If it's just breaking above the 200, so I usually would skip that. So a lot of these guys are extended, but a lot look, they look great. Now, what else is in here? First Solar is one that last week looked like it was setting up with some type of a base. And bounced a couple times. First Solar gets above the 50-day moving average. Got an uptrend, pull back to major support, a pocket pivot. A breakout above here might be interesting for First Solar. And if you want to find a place to fish, if you want to be long right now, I might be looking at semiconductors and trying to see if any of them are not overly extended. Internet retail, I've been a bull on Facebook ever since it was broke out above 32 or 33, which took out the left side here. No, it's down there. This is it. It's back here. I think there was a lot. Take a look at that. Yeah. I got bullish when it took out this high. This is when I thought that Facebook, and so I've been pounding the table ever since that happened, which was quite some time. Continues to be a leader. It's extended, everything is green, but it's a leader, and leaders have a tendency, in my experience, to get more extended. Priceline, I think, has earnings coming. It too is extended, everything is green, pocket pivots. What can you say? It's a leader, but it's extended. I probably wouldn't play earnings roulette there. Orbitz is one that got pulled up on earnings. You could see a big jump in a stock that was below the 200-day moving average, which tells you it's been in a long-term downtrend. Netflix just keeps on rolling. I've seen estimates that the stock could do at $500 or $600. There are still the Netflix bears that put it closer to 200. So quite a few things in internet retail that look interesting. Don't you wish you just bought some VIPs a year ago and went to sleep? The VIPs has just had an amazing run. On Friday, at the end of the day, it was down a dime, but it shot up and sold back down, and we'll see if it sells off this week. But what a great run, from 40 up to 120 since July. Amazon is an interesting one. A lot of bearish calls on this one. Their earnings per share growth slowing down. But I think people were somewhat surprised with their tepid sales growth, or lack of sales growth. All the big box retailers blamed it on the weather. Should have really benefited Amazon. What else is looking good? Third group down is gold, and lots of gold looks good. I'm a big fan of gold. I have American Barracks. I have A&B. I got more gold stocks than I probably should have. But you can see, just like the GLD and the GDX, American Barracks gapped up, a couple of pocket pivots, a kahuna, everything turned green. We had a mobile breakout on Thursday. If gold goes well, then American Barracks, which makes money, could be a leader. Gold Corp, similar pattern. We looked at a lot of them, took Elder, and Newmont is beaten down, probably would pass on this one. LA Nevada is another one. I actually highlighted this one back a few weeks ago, and it's another one that looks good. Elder said it's run too much. I don't know how. I'd still be interested. All green had a mobile, had a Bible gap up from the squeeze. On Friday, everything is green. Kahuna, huge volume, might be one to take a look at. Yamani, AUI, I think there's enough gold stocks for you to go fishing in gold and probably catch yourself a big one. Computer hardware, can you say Cray? Cray just exploded on earnings this week. And then George and I sort of had a little debate about how to manage this. Now, if you're a fundamental guy, a run from 30 to 42, which is about 40% in a single day, probably not one that you want to handle. And I might be looking for this thing to pull back some before I would get in. I've got to understand why it's gone from nothing to $1.29 and back to nothing, so I need to go do some fundamental analysis there. Do they sell off assets, or is this just wrong, which could happen? Everything is green. You could say it's a viable gap up, maybe set your stop midway up, and then play it as a viable gap up. I like to see what it does before I commit. Huge volume in the kahuna, what a beautiful chart. Apple, struggling at its 50. I'm not an Applonian right now. Now, George and I both play 3D system off the 200-day moving average, sort of working its way back up. It's going to have to get above the 50-day moving average. It didn't really kill its thesis. What they did is they came out with an earnings report, a warning, that basically, to me, said still a great company, but we're going to be spending more money on, what am I thinking, on acquisitions and building, and it's going to hit our earnings. Stratasys looks a little bit better. It's retaking the 50, had a kahuna, mostly green, although still red on the weekly. They're going to have erratic up and down earnings as these guys grow and become leaders. But 3D Systems and Stratasys, to me, are the leaders in the group. Diebold, we were laughing about this one because I think this is a stodgy old company, Diebold. And they are in the computer hardware. They're in the calculating and accounting machines. But look at Diebold, a couple of saucers here. Oh, no, that's really a cup. The handle would be way too high to be that a cup. But breaking out from a saucer off the 50-day moving average with a kahuna in each volume on Thursday, a mobile breakout from the squeeze and the Bible gap up. This is one that I might go look at and get an understanding if this is a real story here or just something that's been sideways for some time. All right, that's enough for this group. So basically what I do and what we did at the meeting was we actually started looking at some of these groups one at a time. Managed healthcare, this was a surprise, but I think people are sorting out constantly whether these guys are winners or losers in the land of Obamacare. And they all look the same. They all had a fierce pullback to the 200 and boom on Friday. Kahuna, volume, pocket pivot on Aetna. United Health Group, pull back to the 50. A little bit of volume, Kahuna, and boom, we took the 50 on Friday with a global breakout from the squeeze. Humana, not as deep a pullback, but a big move on Friday, a couple of Kahunas in the day. Volume coming in, global breakout from a squeeze. All of these stocks look similar. They're all breaking out from a short-term pullback. Cigna is weaker. It's below the 200. Maybe you want to have a managed care stock. Maybe they're about to start another run. Integrated oil and gas. I know I have some Murphy Oil that had a big week. It was up 5% on Friday. You can see a lot of them were up big on Friday. And so these guys are things that were beaten up, but perhaps as the oil is going up, which we take at 100 or getting up in that range, we're starting to see some bounces off of 200. I'm not a big fan of buying things that have pulled back like this, but they pull back to support. This one is now broken above the 200. The Kahuna pocket pivot tons of volume, Occidental Petroleum. I like this one. This is one that looks to me like it wants to go higher. Murphy Oil. I don't know why the heck I still had this thing, but it pulled back, and it's in a dinky account that I forget I have, to be honest. Stupid. Kahuna volume, pocket pivot, nice move. It's going to have a ton of override supply and resistance on the way up. So these are beaten down players that have had a nice move after a pullback. It's interesting, pharma's here, and biotech is at the bottom of the list. And let's take a look at a couple of these. Point out some of my favorites. Bristol Myers Squibb, it's a stodgy old company, went from a big pharma to a mid-sized, thick-sized biotech, and they've got some really cool cancer drugs coming. They retook the 50. Not much in the way of earnings per share growth. They probably pay a 3% or 2.6% dividend. Not my cup of tea. Cadence is a buyout, so we don't know to talk about that. Lanet is one that I've highlighted multiple times. It had earnings came out and had a big gap up off the 50-day moving average with multiple kahunas and is running. It's getting expensive now, but look at that earnings per share growth on a stock that trades at a multiple of about 80% of its earnings per share growth. I love that picture. AbbVie has a drug that will compete. Actually, they have a number of drugs. One will compete with Pharmacyclics' drug for leukemia. One will compete with the Hep C drugs from Gilead. And what's really cool on AbbVie is they also got Enbrel, which is just a blockbuster for psoriasis and for rheumatoid arthritis. So uptrend, although fairly deep pullback, pays a little dividend, pays 3.2%. So you get the benefits of a biotech stock with a portfolio, with a pipeline, a good current portfolio, a dividend, and growth opportunity. Which is the reason I like AbbVie. My favorites in this group, Jazz continues to hum. Like the market, someday this is going to pull back hard, but it hasn't yet. It continues to have good earnings per share growth, which is probably part of the reason. And then the one that the shorts left to hate, Questcor, has made another run. It is clearly getting to that point where the shorts have hammered the stock in the past. So I'm careful with this one. If you have it, you should be considering writing calls or something against it because the calls are expensive. And I'm not kidding. The shorts come out with newsletters about marketing things so many times. All of these big pullbacks are because of some short coming out and scaring the bejeebers out of the weak holders, which several times I was one of those weak holders. Back. A lot to like in pharma. I see Auxilium, application software. And a lot of people love data, so let's look through the first three. Ellie Mae, and remember it's earnings time. I suspect earnings are out on this one. Didn't like it before the earnings. A big earnings pop. Don't know enough about it. Wasn't really in much of an uptrend. It's been basing since November. We might do some research on it. Adobe, nice uptrend. Looks like something happened here. Probably earnings with a big move off the 50. It certainly extended. This is what you want to capture. You want to capture stocks that are in a big uptrend. This is starting to look kind of toppy, but doesn't mean it won't go further. I just rather buy closer to support. Similar to be said about Tableau software data. This is one of these big momentum stocks right now, which will probably go a lot higher, but it's not the kind of stock that I'm usually chasing at. I'd rather buy that stock when it gets closer to support. Last two, healthcare equipment index. Just look real quickly. I'll give less commentary about the companies. Just look at the charts. Uptrend, pull back to major moving average. Kahuna volume, big update. Noble breakup from the squeeze. Owner Corporation, don't know anything about it. Love the chart. Probably worth going to take some looksies at it. Boston Scientific, flat uptrend, a little bit of a scoop here. Lobo, not much of an earnings break for share growth, unlike the previous one, Phonar. And Stryker, again, something happened here. I don't know if that was earnings, straight move up. Probably extending. It's near the high jump where it had a red candle high. But I might want to take a look at its story as well. See, this is what's beautiful about top-down investing. We're finding a lot of stocks. Unfortunately, a lot of them have probably become extended. But this is how I fish from top-down approach, looking at the best industries and looking at the best stocks in those industries. Applied Materials breaking out, great earnings per share growth. This stock has been a quagmire for a long time, but it was a big leader. If we go back, there was a time when this stock was a cha-cha-cha, rah-rah-rah stock, but it's been a long time since this stock has been a big leader. But is it waking up again? It might be. I only have these charts going back to 2005 because it takes too long to calculate the indicators. So Applied Materials looks good. Teradyne went up. Kind of funny looking at the saucer here at previous highs. Multiple pocket pivots. Everything is green. Pocket pivot and a little into a squeeze. That looks interesting. Don't love the earnings per share. Lack of growth. And KLA 10 core kind of going sideways. Is it different this time? I have no idea. But it's been living in this Jarvis box for quite some time. Everything's green. All right, so that's to the upside. Just want to comment on a couple of the biotech stocks because even though biotech made it to the bad boy list, it was only because of a one-day performance. I'm still a big fan of Gilead. When you look at that 5 days, it was up 2.46%. I guess something has to be bad for the week, for the day. And you could see it's still at the 8-day exponential in the 17, mostly green above. Great earnings per share growth coming into the stock. Its Hep C drug is kicking butt. They continue to go to the FDA for expansion of their label. Intercept continues to be buy at your own risk. I mean, it's starting to put in a baseline, not a base, but it's starting to live here long enough that I wouldn't be concerned it's going to drop all the way down. But I still expect a lot of volatility. It's a very expensive stock for a company that is years away from a product. One of these companies had an approval on Friday. I can't remember what it is. Well, you'll know it'll be the company that has the big gap up on Friday. So that's my top-down approach. The market looks like it's rebounding, but as we all know, it's rebounding and setting a long run, long overdue for some type of a pullback. But if you were out of the market because you were concerned, you would have missed just a fantastic week. So a lot of people like this Organovo. It's sort of 3D printing meets biotech, and they had some data about creating some liver cells that might be useful in testing drugs. It's one of these risky biotechs that doesn't make money. So now I'm going to flip for a couple of minutes and show you some new stuff on my bottoms-up approach. So as you know, for bottoms up, I do a couple of things. One thing I like to do is go into all securities, and I might just start with a plain scorecard, and I'll put a scorecard with 2.5 and 150. My scorecard index, as I talked about over the weekend, is a mixture of fundamentals and technicals, and I use this on stocks to see if the cream come to the top. And if you pull your little eyes over to the right, you can see stocks that are squeezing and breakouts. If you don't have this yet, it's coming. So if I have these features, then I could do all kinds of scans because of them. So before I look at them, let's see if there's anything here that's interesting. You see China distance learning is one that we didn't talk about yet. And this is one that came up over the weekend, and we loved it. Everything is green, pull back to the 50 and running, makes money, and there's also TAL, which I think is actually XRS as a ticker, that also looked interesting. So this was one that we liked in our meeting. Endeavor Silver is typical of a lot of silver stocks, just like the SLV has broken out on a big run. It had a viable gap up on Friday. A lot of strength there. Interestingly, it does not make any money. Dot Hill, somebody brought up at my meeting, and we all liked it. Pulled back to the 17, breaking out here. Kahuna, volume, everything is green, makes money. Cheap stock, but this is one that's going to be on my buy list come Monday, so come Tuesday, I should say. What else did we see that was interesting? So I'm just looking at the market now to point out things that we looked at. So we brought up Silvercrest today to Dr. Elder. This thing's run a ton, but it's a cheap stock. It's a mining stock, silver stock, and all of a sudden it's got volume coming in. Everything is green, makes money, interestingly. The only thing that Elder said that was bad about it is the volume's too little, 290,000 shares. If you think about it, with only 300,000 shares at $2.60, it costs less than $1 million to buy all the float in one day. So a big position may take a while to get rid of, so use that at your own risk. So what else would I do? Well, I like stocks in an uptrend that pull back to support and are breaking out. So how about if I look for stocks that have Kahuna Force, they're above $2 and 150,000 shares, they're above the 200-day moving average, so they're an uptrend, and they're within 2% of free parking, which is the 50-day moving average. I will include this in the package that I sent to George. These are stocks, uptrends, pull back to support with a forced Kahuna on Friday, meaning lots of energy coming into them. So what would we find? See, a lot of these are stocks that have been beaten up, so they're not going to be leaders from a fundamental perspective. But here's Aetna. We looked at this, pulled back to support, major momentum move with pocket pivot, Kahuna, tons of volume, taking out the 17 and the 50. Humana, so we've already looked at that one. United Health Group, we looked at that one. WellPoint, do we think that healthcare is moving? Cody got stuck at the 50, and this is one of the risks of the stock that's underneath the 50. It's been resistance this whole way down, and it shot up and pulled right back to it on a Kahuna. Now, this is the kind of thing that if it can decisively break above this, it might be interesting, but right now it's in a downtrend, and I skip it. Marathon Petroleum, we saw the integrated oil and gas moved up. Maybe this is one that we should have looked at. We took the 50, a couple of Kahunas, in a squeeze, had a mobile breakout on Thursday. Everything is green. Probably pays a dividend, 2%. But if you want to be an integrated oil and gas, I like this one. I just moved it over to my buy list on a more long-term hold. Stratasys we looked at and liked. United States Steel had a big run-up, trying to retake the 50 right here. It's squeezing. It might run into resistance here. It did have a Kahuna on Friday. Cliffs Natural, like U.S. Steel, had sold off. It got above the 50. Not nearly as a pretty chart as U.S. Steel or the others, so let's skip it. Synergy Resources, pulled back, went sideways. Kahuna broke above the 50 with a force of a mobile breakout from a squeeze. Everything's green except the weekly Bondo makes money, and it's a less than $10 stock. Is it gold and silver or is it oil? It's oil. So all I'm using this for is to show you that you can create scans that can find stocks in exactly what you like. All right, let's take it to the new guy. Let's say I want to find stocks that are above $2.50 and 150,000 shares and have a squeeze and a mobile breakout. A lot of them. Okay, so 94. So let's just look at some of them. I think Gentium is in the setting of a buyout by, I think, Jazz or somebody. I can't remember who's buying Gentium. Well, Gentium is being bought out, so who cares about Gentium? TAL, we talked about the other Chinese education. Mobile breakout from the squeeze. Didn't look like much of a move, but makes some money. Inland real estate, no thanks. Pulte Home, George and I had a debate about home builders. And clearly the home builder industry has taken a hit of late, and it had a big run a year ago and pulled back. I took the argument that it's on a move again. George wasn't convinced. And then we walked in today, and the Investor Business Daily group had a slide up of, I think, Toll Brothers of Pulte as one of their picks for breaking out. So home builders might look interesting. That might be something have been beaten up, was basing. Here's a mobile breakout from the squeeze. KB Home, speaking of home builders, got above the 200, pulled back to it. Looks like it wants to run. Mobile breakout from the squeeze with great earnings per share growth. Here's another healthcare stock. Is there something about these healthcare stocks, specifically the managed care, Humana? Northwest Biotherapeutics, this falls in the small biotechnology company without a drug on the market that loses money. That's a preclinical company, but these companies have a tendency to run. It ran up to about 7 and pulled back down to 3.3. It's had a nice uptrend from there. A mobile breakout from a squeeze on Friday. Everything is green. U.S. Energy, don't know this. It's a cheap stock. It's another crude petroleum and natural gas. Meritage, another home builder. It's not a tight chart. It's not a tight uptrend, but it's coming off the 50-day moving average with a kahuna and a mobile breakout and everything turning green. I just think it's really recovery by the home builders, frankly. But what was I trying to find? I was trying to take my 8,000 stocks and show me stocks that are squeezing that have mobile breakouts. Here is Southwest Airlines. I've highlighted the last several times. Ran up, pulled back sideways. I think it wants to run again. Mobile breakout from the squeeze is a big positive thing there as well. So I have written a number of these views, and with this view, with these views taken into account are my new squeeze and mobile breakouts. I can include things in for example, I can look at green candle lows. Not a whole lot of green candle lows on Friday, which is not a big surprise, but I usually like to look at these as well to see if anything is starting to reverse from support. I might want to combine my green candle lows with a kahuna. So here's beaten down stock. Green candle low, why? It's the lowest low in many days, and it closed higher than it closed above where it opened, so it's a green candle, ton of volume. Tech resources. So a lot of these, because the reversals are in downtrends, and I'm not that interested in them. So I don't see anything here that comes up that makes sense to me. One thing that I use these for is just to count up. I have 17 green candle lows, and I have 195 red candle highs. What does that make you think? It makes me think that I've got a lot more stocks that are extended at a risk of falling than those that are extended at a risk of shooting back. I might look at how many mobile breakouts do I have. I've got 273 versus mobile breakdowns. I have 83. That would be considered bullish. So at the end of the day, I've got a number of new ways of taking apart the market. So last thing is, I did my group inclusion filter earlier. That if you remember, the group inclusion filter is a tool where I take a number of different, I take my list, frankly. I did it a while ago. That's probably no longer set up. But I take a tool where I check off either very smart groups or the groups that I like to follow, and then it tells me which stocks are in the highest number of those groups. So if I have 20 groups that I think are bullish, and I have a stock that's in all 20 of them compared to a stock that's in only one, which stock am I more interested in? Well, I'm then interested in the one that got it to a lot of groups, of course. So let's do a rapid fire look at the group inclusion filter list, which would be some of the best stocks. None of them are breakdowns, of course. I have my top 30. Now let's go through. Many of these we've looked at already, and then we're going to say good night. Notice there's a lot of biotech in that list. China distance learning, liked it already. Everything is green, in an uptrend, breaking out. Planet already broke out. This was a profile of a week ago, and 3 weeks ago, and 5 weeks ago. NXP, semiconductors, nice run up, getting extended. We looked at it earlier. Auxilium, a new drug approval. Let's see. We're getting to, I guess it's a third stage breakout. Mobile breakup from the squeeze, broke out on Friday. It's got $1 coming into earnings next year. So this will be a box 7 stock with earnings coming in and a lot of growth rate. It's an interesting story and an interesting stock. We already looked at Micron as a leader. Ligand is one that, and I've talked about this. Every time this hits the 500, it's a buying opportunity. The 50, it's a buying opportunity. Hit the 50, a couple of components, great earnings into the races. Ligand had a great week. Manitowoc sold off a little bit a couple weeks ago. Farm and mining construction. If miners do well, then Manitowoc, United Rentals, and other companies that supply miners are likely to do well as well. Alexion, we always talk about this, the expensive drug and the rare disease, and a company that just keeps going and going with multiple targets over $200. O'Reilly Automotive on great earnings, had a big gap up, continues to run. It's extended and too far to buy, but was a nice run to get there. Jazz Pharmaceuticals, we've already talked about. Priceline, we've already talked about. It's got earnings coming, starting to get extended, clearly a leader of our time. Cal Education, we already talked about as a stock with a mobile breakout, basing very much like the other Chinese education stock that I looked at. Questcor, that pharmaceutical stock that I think the shorts hate, which has had a nice run up off the 200-day moving average. YY, one of my holdings, want to pull back. I owned some, sold it, rebought it. Held the 50, breaking out now. Gave up some on Friday. Everything is green. It does make money in 2 quarters. Qihu, I used to think this stock was all over the place. I don't know what I was thinking. Maybe here was a little bit, but it seemed to have gone from tight to medium and tight again as it runs back up and takes new highs. A Chinese internet story that continues, and gaming story continues to be a leader, and with lots of earnings coming into the stock. Ubiquity Networks is another networking company. Supply a lot of the broadcasters. Sort of going sideways here. Great earnings per share growth, if I remember correctly. Synaptics, they make the mouse on all my notebooks, and I'm keeping them in business personally. Nice uptrend. I don't think anything special here. Doji at the top with the red candle high. Probably not the best time to buy. Michael Kors, I actually did not, my calls, I had some money in, I covered him at Friday, and at the end of January, didn't take stock. That was a mistake, because this thing broke out on earnings and just hasn't looked back. Probably one of the biggest leaders in the market, certainly the leader in retail right now. SanDisk, everything's green, pocket pivoting, Kahuna breaking out. Good earnings per share growth might be one to take a look at, especially as I mentioned the strength and semiconductors. Green Mountain Coffee Roasters, I think it's moved. I'm not sure how much more it's got to move right now. What's the catalyst going to be? Big run up on earnings. And then again on Coke coming in with a 10% taking the company. Everything is green. I'm not sure I had to sell it if I had it, but I'm not sure I'd be adding to it and buying these shares right now. Capstone Paper, what a lovely picture. I've profiled it several times. Great earnings per share growth. PKG and other packaging companies have also looked good. You have a stock, just a couple, double bottom, a couple of saucers here, whatever it is. Everything turning green, pocket pivot breaking out, massive earnings. Earnings are out. Love this stock. It's a beautiful picture and continues to be one that's probably very viable. When I see the PE of 21 and a growth rate of 200, I get kind of excited. Illumina is a leader in the healthcare testing and making molecular tools to help pharma and to help us with diagnostics. It's super extended, and every time I think it's too expensive, it keeps going. So I'm clearly not an expert on this. A big market leader in the life sciences. It's just had a big run. Roche has tried to buy them several times. Already talked about Facebook. Activist is the old Watson, lower left, upper right, generics house. Continues to run. Biogen IDEC, this is one of the better biotech companies that I'd like to buy off of the 50. It's getting extended now. It had a red candle high on Friday, so I'd probably pass it at this point. United Rentals is like Manitowoc. There's a lot of renting of equipment to construction and miners, and they probably would benefit with the improving world economy. It's one of my bigger positions. It's had a huge recent run. Everything is green, long in the tooth and extended, but I think could be a growth area. I talked about Southwest earlier. They stock that had ran up and the airlines went sideways, which many did this week with oil going up and all the weather delays, but it was supposed to take off again as well. We looked at data as a high momentum, high excitement play. MPEL is a Macau-based casino, which we've talked about many times. People may like Wynn in Las Vegas Sand better. This is 100% levered to Macau. Generac, cold weather, more generators. You can see it had some earnings come out in a big gap up here. Tough one to play. For me, I don't see the forward-looking earnings that are that exciting, but you get cold weather and the stock takes off. And I've not played this stock well at all. And it's really been in a big run over the last couple of years. I guess I don't believe the story and never got blown away by the earnings. There you go. That was my top 30 on the GIF. I think I've given you a ton of buy ideas. Hopefully I got you excited about how I'm using mobile breakouts and squeezes, both from a scanning perspective as well as from my charts. And if what you look for includes a combination of kahunas and pocket pivots and viable gap ups, you can build all of them within HGSI. And let me show you why I get excited with them. Because I want to find things that are going to pop up. Viable gap ups are something I built into HGSI. That's only one there, so we'll find my viable gap ups from TradeStation will be somewhere in here. Had a big week. But I wanted to show you, here's I combined Kahuna Force with a mobile breakout, a pocket pivot, and a viable gap up. 23 stocks, 21 of them were positive a week later for a gain of 5.74%. The viable gap ups that were in HGSI 6.52, 20 out of 24 up. There are so many things that are moving right now. I'm trying not to get overzealous, and maybe this is going to be a melt-up before we have a big correction. But what a great week to be long. Have a safe week out there. After a week like that, giving some of it back would probably be anticipated and not a surprise. Not, S&P's up a little bit more. Excuse me, up a little bit, but not much more than that. Russell's down a little bit. Have a great week. Thanks to everybody who somehow made it through the weather and got to New York. Had a wonderful time despite the little blow-up at the NYC Summit, and we'll do it again sometime. And I hope to see many of you in Palos Verdes. Thank you all. Good night. This went way long, but you can always turn it off when you want to. I like doing it. Good night, everybody.